stop hunting, and the Forex market. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Thursday in Perth, tomorrow night non-farm payrolls. Today we're going to be talking about stop hunting and the M's and W patterns. Earlier this week I talked about going and getting the free course that I have the link below for, and in my on my index bar on my right hand side on the blog. It explains a lot about how the market structure is built up over the week by the banks, and how stop hunting is essentially the main reason why 90, 95, 98% of traders lose money. And unless you understand that, the chances of you succeeding long-term are probably slim to none. Not to say that there aren't other ways to trade the market. It's more about having an awareness about what is actually happening in the Forex market specifically, as you know, 60, maybe 70% of that volume is controlled by the banks. Whether there's collusion or whether they work together, you know, it's irrelevant, but the same behaviors happen week in and week out, where there will be consolidation through the end of the New York close into the Asia markets, which typically will, you know, usually be 25 to 40 pip range. And there are also other types of scenarios where they break out in Asia, but largely the market is always about seeking liquidity, and they know how most retail traders approach the markets in terms of where they place their stops, how they are, you know, looking for swings to get into the market intraday, and little things that they know that they will use against us in order to entice us into the markets. You know, we talked about the most critical times of day for trading. In the London Open and the New York Open specifically are where you will most often see these W and M patterns. And typically you'll see a stop hunt around this time, either to begin a new trend or to end a trend that's in place. So often we'll see a move in London that will drive either to new highs or new lows, or fill a gap from the previous session's profitable trades. And then we'll see that move possibly end on an M pattern or a W pattern and then reverse into the New York session. But if you haven't done so, I really encourage you to get that free course and go through that, because it really explains it more in depth and in detail. And what's important about that is when you can identify those turning points in the market, that's where you can potentially identify opportunities to enter the market where you can predefine your risk, and you know that possibly the high or the low of the day is now in place, and you're looking at perhaps a 50, you know, 30, 50, 100, or maybe 120 pip move in that session. We've seen that happen Monday, Tuesday, and Wednesday this week already, where there's been well over 300 pips. And we've seen most of that occur on the pound crosses in the last few days. So, you know, you don't need to hit all those trades, but it's really powerful when you can identify those at the session opens and be able to place yourself into a trade. And usually when they've got traders trapped in one direction, those markets do not give them a chance to get out. And what's powerful about that is when you're in those trades, and I'm sure many of you have been in trades where the market will take off and move 30, 40, 50 pips, and it doesn't look back. There's never any heat against that position. And those are the types of trades that I like to participate in, because I don't want to sit in a market for 2 or 3 hours and have it go sideways, which is why I don't trade the Asia session, because typically that is where a lot of the liquidity is accumulated before they push it out 25 or 30 pips to one side or the other, if it's a stop hunt, or if we've seen the stop hunt in Asia and the market is now consolidating to press to the next level of its move, which will usually to some degree fill its average daily range by the time that it's done. It'll pull back in the US after its move 9 times out of 10 and consolidate and go into Asia and continue that cycle again. So really important. Again, I encourage you to get that course. This is some of the stuff that you can be going through and back testing for yourself. And you know, we talk about this in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download it. It's an audio file. But you need to get in the habit of ritualizing yourself on these routines and studying the stop hunting. These stop hunt trades happen every single day in London and New York specifically. But these are where you have the opportunities to participate in trades that will give you a 5 or 10 to 1 return on your risk. And that's where you can make money. That's where you can make mistakes and be wrong right away and take the loss and get back into the market and participate in these moves and extract the maximum out of a winning trade. I talked about going and visiting some traders in the States and in Canada. And it's so important. The preparation is the key. Being prepared and looking and identifying what's happened and transpired in Asia and understanding how the market is building going into the London Open, the Asia close, studying it that after, if there's been a move or a stop hunt and we're heading into the New York session, what's the likelihood we're going to see that continue, or are we looking at a stop hunt pattern or a reversal pattern setting up going into the US session? The other part of that is that we've talked about this in previous videos, how Monday, Tuesday, 80% of the time will often be the low or the high of the week in terms of the buying or selling level extreme. And that's where the midweek reversal comes in. And so there will often be 3 pushes over the 2 to 3 days and sometimes 4 days into Thursday. So typically, like it's a payrolls week, we may see an extra push going into Thursday and then a reversal on Friday where it takes back all of the gains of the week. So that virtually the currency is opened up and closed almost at the same level, but we've had maybe 200 or 300 pips of range trade over the week. So very powerful stuff. Get the free course, go back, test it yourself, start studying these patterns, understand that why a lot of the technical analysis can be frustrating for people, because in currency especially, the banks manipulating the markets and moving the markets to where the liquidity is or where they've built up liquidity and then moving it to the other side of the range. You know when you're trapped because the market will move quickly and they do not give those traders a chance. You know, I've been in lots of trades where I just wish the trade would come back to a certain point so I could get out at break even. And you'll notice that it struggles to get there and struggles to get there, might come in with a few pips and then boom, it automatically moves away quickly. And if you didn't take that loss, and I've done this in the past, I've talked about blowing up small trading accounts where you hold on to a losing trade and it just gets bigger and bigger and bigger to the point where it blows out a big chunk of your capital. So get the free course, study the M's and W's, study the market opens, the stop hunting, see how that can apply to your own trading. If you're struggling or if you're not getting the results that you want, see if this will help fit into your trade plan a little bit better in terms of time of day or the types of movement that needs to occur, and then master those setups. Keep getting better at them, learn how to trade them bigger, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.